Hello and welcome to Rajya Sabha Television. You're tuned in to Policy Watch with me, Frank Rausen Pereira. Industrial production grew at a high rate of 7.5% in January 2018 against 3.5% in January last year. This comes on the back of good showing by manufacturing coupled with higher offtake of consumer and capital goods. The IIP increase in January was mainly on account of growth in manufacturing sector that grew by 8.7% during the month as compared to 2.5% in January 2017. Capital goods showed a sharp increase in output by 14.6% in January 2018 as against a decline of 0.6% a year ago. Consumer non-durable goods too showed an increase of 10.5% as against a growth of 9.6%. On this edition of Policy Watch, we will analyze if the worst is over for the Indian economy. Joining me on the program today are A.K. Bhattacharya, Editorial Director of the Business Standard, and Ajay Dua, former Secretary, Ministry of Commerce and Industry. Thank you to both my guests for joining me on this edition of Policy Watch. Mr. Bhattacharya, I'd like to begin with you, of course. What does the macro data indicate for the economy?
Let's try to look at the sectoral composition of this IIP. If you look at the 7.5% IIP growth, what it shows is that the manufacturing sector has clearly given it a boost. Now, as we know, manufacturing sector has a weight of around 76% in the IIP, and manufacturing sector does well, you get to see a better number on the IIP front. But the more important point here is that this growth in manufacturing is not just development in January. Now consecutively for 3 months, which is November, December and January, you have seen a manufacturing growth clocking over 7%. Now if that happens, then I sense that, which is why you have seen the last 3 consecutive months, which is from November, December, January, your IIP numbers are clocking over 7%. The additional point that you need to note here is that the capital goods sector, which you also mentioned, is actually in this period or November, December, January has recorded double-digit growth. Now, capital goods sector recording double-digit growth is good news for the investment rate in the Indian economy. Now, if the dispatches of capital goods has risen to that level that it is growing by 14%, 13%, 12%, which means that people are probably beginning to invest. Now, if you invest more, naturally the investment rate economy will go up and it will have a positive impact on long-term GDP growth.
Sure.
And finally, I would say that the manufacturing sector has another positive correlation with jobs. Already we are seeing, going by the Indian Labour Institute's numbers, there is some uptick on the job creation front. Now my sense is that if you see manufacturing growth coming up like this, and if it can maintain this momentum, probably at last we will see some job creation happening in the manufacturing sector and many other associated areas.
Indeed. Mr. Dua, is this a broad turnaround or is it a sector-specific turnaround?
I would think that this is a revival or signs of revival, strong signs, because it's happened now over 3 months, but it is in the formal sector of the economy, the organized sector. We've seen a revival, as Mr. Bhattacharya just talked about, the manufacturing sector, which is 3/4 of this index of IIP, the remaining 25% being taken by mining and electricity, almost in equal portions. We've also seen a revival in demand for electricity as well as generation of electricity. So the revival to an extent is responsible for that. Mining has got a slight increase. The overall increase for the year is just 0.3%. My concern is going forward, I don't know whether we will be able to sustain the increase in the mining portion. Reason being, we have now and right concerns of the court iron ore mining in Goa has been stopped. And apart from the fact that it was a very important activity both in terms of employment as well as in terms of revenue for the government of Goa and the people of Goa, it was also an export earning commodity. We are going to see now, the anticipation is that it will be the remaining next quarter or 2 quarters till the Supreme Court revisits the matter, we could see a negative rate of growth in mining in the country. Second, going forward, we have to be concerned about manufacturing sector sustaining its growth, and to some extent, as we all know, manufacturing sector's growth is linked with the level of exports as well. Now, with what
but sustaining growth is enough, or should we exceed and go beyond what we are looking at right now?
No, right now we need to do much more than what we are planning for. The reason is we are looking at all these figures on low basis. We have seen 3 years of deceleration in the manufacturing sector on the whole. Forget the monthly issues that trend wise. We certainly need to do much more. We need to get back to 12 to 14% rate of growth in manufacturing, which we have seen between the years 2005 and 2008. And that is when the employment will get created. Just now there was some discussion about how many formal sector jobs have been created. Certainly the data shows 1.2 lakh jobs being created, whereas the requirement is tenfold. So my straightforward reply to you on that question is, we need to do much more, but what we are doing forebodes well that there is potential to go forward.
Okay, there is immense potential to go forward is what you're suggesting. Talking about the quarter, of course, Mr. Bhattacharya, these figures or this data, is it a positive trigger for the, quarter ending March GDP figures?
Yes, to some extent, these numbers will get captured from the value side in the GDP numbers. Particularly, as I said, the capital goods double-digit growth seen in January is a growth of 14%. Will be captured in the capital formation side. So therefore, I do see the GDP numbers will reflect the upturn in the IIP numbers. But my concern is that one, it should not drive the policymakers into any complacency, because having recorded 3 consecutive months of 7% plus IIP and capital goods growing in double digits might lull policymakers into the belief that existing policies are getting you there. So why stress over other reforms imperatives? I mean, for example, if it is true that the composite labor reform bill will not have any provision for allowing hire and fire for companies up to 300 employees. Now, if that provision is indeed going to be dropped, in my view, it will be a setback for sustaining future industrial growth. Similarly, if this growth figure lulls us into believing that the financial sector stress, which is a biggest constraint for ensuring sustained growth in the economy, is not handled correctly and appropriately. For example, there is a fear that the resolution of stressed assets may get prolonged a little longer, and if it does happen, then I would imagine that the banks will not be freed up from their stuck assets, India Inc. will not be freed up from their leverage positions. So therefore, to ensure that this growth trajectory is maintained and it is going up, as that is your question, we need to take a concerted approach to all those policy areas and not relax a wee bit.
Sure, not relax a wee bit is what you're suggesting. We're going into an election year, Mr. Dua, and talking about the policy makers, can we expect some big ticket policies in the near future?
Before I answer that, if you will permit me to just make one comment on, you said Q4 figures of GDP growth. Yes, as was mentioned, if you do well in any segment of the economy, it gets shown in the GVA and the GDP. But we must remember that this entire IIP canvas, whether it's manufacturing, electricity, mining, total do not go beyond a quarter of the economy. Manufacturing about 15 to 16% and 4% each, if you take roughly. That's the quarter. We have to be worried about where does the remaining 75% of the GVA and the GDP come from. Largely it is the services sector.
Yes.
With agriculture being responsible for only about 15 or so. I don't see, as I said, to me every sector is important for some purpose or the other, agriculture for employment purposes. I'm not sure whether we are over with all the kinds of difficulties which we have seen in agriculture, the distress which we have seen, something which we saw being demonstrated in Maharashtra
yeah.
with that long march, and all because the vulnerability to rainfall. Similarly, in the services sector, probably in the hospitality, tourism industry, there is a degree of revival. But across the value chain, whether it's the entire segment of transportation, whether financial services, all those sectors I think need to be propped up.
Sure.
Government services again is a sector which figures in their public administration service, etc. The government's hands are tied now, having overspent in the first 3 quarters. The expenditure in the 4th quarter is not going to be sizable, and whether it was consumption oriented or as part of it investment oriented, certainly that impacts the figure of GDP. So I am confident that we will get to a figure of 7%, but in this quarter, which means roughly an achievement of about 6.5 to 6.6%
yes.
For the year as a whole. But again, I would say lot more needs to be done, particularly on the employment front, and that's what gets me to your question about election year. In the election year, the expenditure on consumption oriented items usually tends to be higher, not because you are creating jobs per se, but you are satisfying people much more, giving them much more disposable incomes. I think that is bound to happen, whether the government can afford it or not, and if that happens, maybe it is going to be impacting the medium term rate of growth of the economy.
All right. Okay. One quick closing comment from you, Mr. Bhattacharya. The latest WPI inflation data is out. Is that a positive sign?
Well, yeah, it's clocking at around 2.48%, which is definitely actually at a lower level than the CPI, and the CPI has also come down and the WPI has also come down. But remember that the WPI is largely driven by primary articles, and the largest weight comes from the primary articles, and there you have seen actually a decline in prices. There is a decline of around 1.3%. Now, and whereas in the other sectors, the secondary sectors, you have seen marginal rise. So while WPI at 2.48% is a good sign, but in the current situation, the Reserve Bank of India does not look at WPI at all as far as determining its monetary policy stance is concerned.
Indeed.
So to that extent, its impact will be limited, because the RBI will look at what is the level of the retail inflation, and that inflation level is now of course less than 4%, but when the numbers for March come next month, that only will influence the RBI Monetary Policy Committee members on what will be their stance on the first week of May.
Indeed. All right. Okay. On that note, then, we'll call it a wrap on this segment of Policy Watch. It's time for a short break now. Still to come, the Reserve Bank of India has scrapped the bank guarantee instruments such as the letter of undertaking and letter of comfort with immediate effect. We'll analyze the impact of the move on the other side. Stay tuned. We'll be right back. Welcome back. You're watching Policy Watch with me, Frank Pereira. The industry is assessing the likely impact of the RBI decision to scrap letters of undertaking and letters of comfort. Industry chambers feel it could affect trade financing by raising credit costs for importers who use them to get cheaper credit overseas to pay suppliers. Several industries use these LOUs and LOCs, including gems and jewelry, oil and gas, electronic goods, solar panels and metals. Banks issue LOUs to customers as a guarantee to honor their payment obligations to overseas suppliers. LOUs account for 4 to 5% of the credit finance trade. Letters of comfort are typically provided by banks to assure the financial soundness of their customers. Letters of undertaking triggered the biggest bank fraud in recent times. Fugitive jeweler Nirav Modi used them to dupe the Punjab National Bank. He got his first PNB guarantee in 2011 and over the next 74 months obtained 1,212 such guarantees. In our next segment, we will discuss the implications of the RBI's decision. Still with me on the program are A.K. Bhattacharya, Editorial Director of the Business Standard, and Ajay Dua, former Secretary, Ministry of Commerce and Industry. Mr. Dua, I'd like to start this segment with you, of course. What has prompted the RBI to take this decision, and should it have been done earlier?
I think we don't have to go very far to look at what's prompted the RBI to come out with these fresh guidelines. The recent, you refer to the PNB bank issuing 1,200 odd LOCs, and not sure how much of those 14,000 crore rupees, now roughly the estimate given to one customer or one family, the Choksis and the Modi Nirav family, is about 14,000 crores. Whether how much of it will come back, and there is a possibility that many other banks have also done something similar. The government has already, the RBI has already ordered auditing of all such trade finance activities of the PSBs to start with. Whether it should have been done earlier, I would say yes. The fact of the matter is, even if it's just 4% of the trade finance, guidelines needed to be in position to make sure how public money routed through the PSBs is going into the hands of traders, because this is basically all for traders. The fact that same set of people were rolling over these after every 3 months, and I'm told that the total number is over 12,000
Yes.
LOUs have been issued and which have been constantly getting rolled over. Which constitutes a fairly large extent of advance made by the banking sector. So the guidelines regulating them, certainly this needed to come about much earlier than right now.
Sure. Mr. Bhattacharya, how are these LOUs and LOCs used overseas? And how does it work really?
Well, it works as a trade financing route. If you are importing something and you have an export consignment against that imported commodity, what you do is you need a short-term money. So normally LOEs are issued for 90 days. So that short-term money is provided by a foreign branch of any bank. So your banker issues an LOU to a bank or the bank branch which is abroad, and so that LOU is used for financing the import. And once that imported commodity comes to you, you use that, and then when you are re-exporting it, you get your export proceeds, and with that export proceeds you settle the LOU. So to my mind, it's a very simple, time-honored instrument. I have a slightly different view on the manner in which the RBI responded to this challenge. I think it is a bit of an overreaction. I think it is throwing the baby along with the bathwater, because if LOUs were being used and issued, they were also issued along with some margin money. Now, the problem with Nirav Modi arose because those margin money was never secured. That margin money was not called for, nor was the entire LOE was issued through the bank's core business solutions instrument. So a few rogue employees in collusion with another business person who wanted to get money free and without showing any margin was misusing a system. Now, if you do that and you are penalizing the entire trade, the entire system. Even if it is only 5% of trade finance, my understanding it is accounting for almost 7 to 8% of your imports. Now, if that is the level, so many people are using it, you for one rogue set of employees,
But is it
banks.
is it just one set of rogue employees, Mr. Bhattacharya? Because the problem could be far more serious and much more large scale.
If it is so, then tomorrow, if you find something similar with letter of credit, will you also ban letter of credit? Now, the question is that do you want to go for surgery where medicine will work, or do you want to actually try to see what is a problem? How do you make sure that governance and monitoring and supervision mechanisms are in place? Instead of doing that, what you do is completely eliminate that facility, which to my mind can actually create problems for not only the entire system, but remember, these LOUs will keep coming back to you in the next few months, because these LOUs are issued over a period of time and they are often rolled over.
Sure.
So now suddenly the banking system is flooded with all these LOUs with different delivery dates. Now what has happened is there's a pressure on dollar financing. Your rupee is already depreciated, perhaps for good reasons. So depreciated rupee is good for the economy in my view, but for the wrong reasons in my view. So you are having a dollar financing problem is there. You have shifted this business to the foreign banks. The foreign banks will quietly get into this system. And thirdly, you are actually increasing the cost of trade financing, and therefore exports will also get hit.
Okay.
So I don't think this was the right approach. The right approach should have been understand the mechanics of it, ensure that the guys who are supposed to do the right thing in the right way do that, and ensure a proper conduct of the banking industry.
You know, Mr. Dua doesn't seem to agree with you, because I kept seeing him, shaking his head in disagreement. Go ahead, Mr. Dua.
No major disagreement. All that I'm trying to say is, let's dissect where were these LOUs being used by and large. They were in two businesses. One was gems and jewelry, and the other was oil and gas. Rest of these solar panels and others which you pointed out is very marginal. Major utilization was by a handful of people in the gems and jewelry, not the large ones, not even small. And I'm quoting today Ajay Sahay, the FIO Director General, who's commented on this and said that I don't think the foreign trade will get impacted as much as is being apprehended, and something which my colleague Mr. Bhattacharya also talked about. The question is, when there was no security being taken, no margin money, and all that was happening was a short-term loan, the best way of securing these is by issuing letters of credit against receivables. That is the practice the world over when merchandise export or even services export takes place, saying we will issue a letter of credit and it is against the goods which come. Once you discharge those things, you issue in when the bills of lading take place, and once the goods come here, you pay up and take your thing back. The cycle is far quicker. It is with every consignment which comes in, this thing rolls over.
Right.
And it has got a security. Otherwise, you can seize the goods. You have something in hand. Here we are using it for gems and jewelry. The valuation for it could vary from 5 to 1,000.
Yeah.
Because nobody is a master, certainly not our customs people, nor are our bankers and others. So we have to, as a principle, while I agree with Mr. Bhattacharya that we should not have been doing it, this is a knee-jerk reaction, overreaction. Fact of the matter is, who were the people misusing it, and how do we guard ourselves? I would say, if it is even 4% of the trade finance, over 3% was used by a handful of people, people in the gems and jewelry business.
Mr. Bhattacharya wants to come in. Yeah, Mr. Bhattacharya.
I agree with Mr. Dua on this, that the issue is that few sectors were using it, large importers were using it, and letter of undertaking is used to facilitate and help exporting or an importing party. Letter of credit is used for
Important.
transactions.
Yeah.
So the two are slightly different instruments. In a letter of credit, you need to assure yourself, the bank, that the transacted goods are there and the transaction papers are intact. In the letter of undertaking, you need to make sure that the party with whom you are dealing with, or the party for whom the letter of undertaking is being issued, is safe and sound and following prudential norms. Now the question is that a few bank employees have misused the facility.
Right.
My understanding is that the many letters of undertaking have been issued against 100% margin. It is a different matter that some banks and some bank employees would not insist on those margins. As a matter of fact, the Nirav Modi case came up because when the new officer came on the doing the same job, when Nirav Modi wanted the same LOU to be rolled over, he asked for the margin.
Right.
And to which the Nirav Modi person said, sorry, I never paid the margin.
Yeah.
So my question is, a system was being misused, and if the system is being misused, penalize the guy who has misused the system, but don't throw the baby with the bathwater. Amend the system, change the system, but don't scrap the system, which will create problems for the entire trade.
Okay, all right.
We're
Yes.
talking about not only the scrapping of the LOUs, the Reserve Bank has also issued a number of other guidelines, including limited to 12 months trade finance.
Right.
No more than that. Also hedging against freight risks and other country risks, etc. So a host of guidelines have been issued in the course of last 1 week, post the PNB scam, but we seem to be concentrating a little too much on the LOUs, which probably is something which Nirav Modi was making full use of, otherwise or fraudulently. But the fact of the matter is the RBI needed to wake up to this much earlier, and I would say even late.
Okay.
But we need to have something in position.
But better late than never. On that note, we'll call it a wrap on this edition of Policy Watch. Thank you to both my guests for joining me on the program and putting things into perspective for us. You can always send in your feedback and suggestions to our email ID policywatch.feedback@gmail.com, and you can also tweet to us using our handles @FRP09 and @Rajya Sabha TV. That's it from me. See you again next time.